The best time to buy is when there's blood in the streets. Nathan Rothschild. So what's going to be interesting in this coming week is how will the markets respond to the significant drop in Bitcoin, Ethereum, all the altcoins as far as crypto goes, and then not to mention how the stock market and the indices market ended on Friday. So in this video, we're going to be jumping into the charts and we're going to take a look at what is going on. We also have a really great article that explains why Bitcoin could be the hedge against all of this. So interestingly enough, right now, with everything dipping down, is it just a simple dip and a reset so that way we can find some more buyers to the upside? Well, we've been tracking the XRP charts now for several weeks, and we knew this was coming. We knew that there was a fair value gap to the downside that needed to be filled before it can run up to that $1. So we'll take a look at that. We'll also take a look at the Bitcoin chart, which had nothing but blood red gaps to the downside that also needed to be filled, which is happening now. It's kind of crazy that it's happening so fast and so dramatically, but we'll look at that. And then we'll also find out, like I just said, why Bitcoin, Ethereum, Solana, XRP could be the hedge against this coming recession and the coming stock market drop. That plus much more. We're going to have an awesome video for you today. If you are going to be the first millionaire in your family tree, confirm that by smashing that subscribe button down below. And if you are feeling bullish and you are feeling blessed despite this drawback, let me know down in the comment section by typing in 777. Before we dive in, please note that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptocurrencies, carry risks of potential losses, and always do your own research and consult a licensed financial advisor. We are not financial advisors, and relying on our content for financial decisions is at your own risk. By watching, you agree that we are not responsible for any losses or damages, and we do not guarantee specific results or outcomes. Some links below may be affiliate links, and we earn commissions, which helps support value-based videos like this. And then we also hold positions in some discussed cryptocurrencies because we only talk about what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that being said, let's dive right into the video. So as we mentioned in the intro, Nathan Rothschild, a 19th century British financier and member of the Rothschild banking family, is credited with saying the time to buy is when there's blood in the streets. So whether or not Rothschild actually uttered the famous line, it reveals an important truth about betting against market psychology. And as we jump over here to CoinMarketCap, what's interesting, the fear and greed index is at neutral. So it is not in pain yet, right? So we're not even in fear territory. So this is a significant price drop. As we can see here, 7-day drop on Bitcoin, 13.04%. Ethereum down 15.91%. Binance down 12.98%. Solana leading the pack here with a 23% drop to the downside. XRP down 11% in the last 7 days. And if you've been following us here at our channel, Bull Runners, make sure you click that subscribe button. We had discussed this 2 weeks ago about the potential of price coming down. Now, what was really exciting, we were seeing this momentum pushing up, breaking outside of the triangle 2 weeks ago. And then all of a sudden, this new weekly candle started. It started moving to the upside. Everyone got really excited. And we currently have 4 hours and 12 minutes left in this current weekly candle. But what we talked about, and it was very, very important, is there was a fair value gap right here. You can see this. There's a red spot in between there. Now, what a fair value gap means, it's an imbalance in the market. So there's so much buying so fast that sellers were not even competing against it, okay? So same scenario happened here down at the bottom. That first initial breakout week that we had, the week of July 8th, there is between this candle and the bottom of this body, it was left a fair value gap. Now, what's interesting, as we can see right now, from the bottom of this candle to here, that used to be the fair value gap, but it is starting to penetrate. This little white line right here is the 50% level of the fair value gap. So typically, fair value gaps will need to be filled or mitigated to the 50% level, if not 100%. You can see right now it hit exactly into that fair value gap, which was right here, and it started to pull back to the upside. Now, when we take a look at this daily, we can see right here, price got all the way down into this fair value gap, literally hit it right next to the top of it, and started to move its way back to the upside. Now, we were talking about the potential of price getting into that 50% level of the weekly fair value gap and then making its way back up to the upside. Because when we took a look over here on the weekly charts, we have really positive news. And there is a fair value gap all the way back up here at that $1.09, $1.10 level that we are really excited about that getting back to. Now, I've been studying charts and trading for many years now, and there was someone that told me a long time ago, and I don't remember where it was probably on a YouTube video, but they said, show me the charts and I will tell you the news, meaning the charts front run the news. Now, when a big, massive information news dump comes out, like the fact that we're now heading into recession, unemployment rate hits 0.5% on the Ham report, stating that a recession is really here, et cetera, then obviously the market starts to dump. But in reality, the market was telling us in advance that that was going to happen. And it could be just a real quick blip on the radar, a quick fill of this gap, and then move back to the upside. Obviously, what we talked about earlier, the daily gaps, there's quite a few more to the downside here. It could even come back. What would be interesting, we had this lower level triangle pattern that it did break out of, if we remember, on July 14th, ran up to that longer time frame triangle pattern, broke through it, tested it. Now we're coming back. Could we see a retest? Interestingly enough, if this price does come and fill these daily fair value gaps to the downside, there is even one sitting right here at 44 cents. It would essentially be retesting off of that lower level triangle before it can move to the upside. So we're getting into the next day, right? So tomorrow being Monday, will there be negative news that continues to pour in and really crash the market? There's word that there's going to be war between Iran and Israel. There's a lot of that going on over on the political Twitter. I spend most of my time over at crypto Twitter, but there's things coming in advance that could potentially lead to more downside for all of crypto, for all of the markets. Now, when we take a look over here, let's look at Bitcoin. We know Bitcoin definitely is the leader in the market. So as we can see right here, price did run down significantly in this weekly candle, which I said is closing in 4 hours. It dipped into this channel right here between the 50 and the 30 exponential moving average, and it's rejecting. So if the 30 exponential moving average holds on the weekly, we could very likely see a return back to the upside. And then that also correlates with this article I want to tell you about right now. Why Bitcoin could benefit as potential recession looms. Now, this may not be an immediate next day benefit for Monday, but if we are going into recession, the market does start to do a correction, the traditional stock market, and it continues to fall. Well, in this article, they talk about how Bitcoin could be the hedge against it. So with jobs numbers looking bleak, analysts now expect the Fed to start cutting interest rates fast, which is good for Bitcoin's price. The recession has arrived. Inflation will soon spike, tweeted financial commentator, noted Bitcoin critic Peter Schiff on Friday. He added that this is one of the weakest labor markets in history of the United States. The tech-heavy NASDAQ took the largest hit, falling nearly 2.5% as of writing. S&P 500 and Dow both down 2% each. Recession are generally viewed unfavorably for stocks since this means less income for businesses. But Bitcoin could break away from the stock market shift in such an environment. James Butterfield from CoinShares said the initial Bitcoin price reaction has been in line with other risk assets, but we don't see this continuing in the long term. Butterfield told Decrypt, it is likely that we will see the Bitcoin price diverge from equities once we see corporate margins being squeezed by low consumer demand. In fact, liquidity may be coming soon. July's poor jobs numbers have the market extra confidence that the Federal Reserve will cut rates by 0.5% September and to begin re-strengthening the economy twice the size initially forecasted. In fact, they're talking about a rate decrease in September, possibly October and December of this year. And as such, the US dollar index cratered 1.1% on Friday, meaning USD is already losing demand relative to other currencies. So in closing, with the Fed weakening monetary policy, it will be supportive for fixed supply assets such as Bitcoin and gold. So when we take a look over here at Bitcoin, we do know, obviously, we've had a pretty severe drop to the downside. It is being supported and held at 30 exponential moving average. The 50 exponential moving average is looming down below, and this is on the weekly chart. There is also a extreme support line here, a spider line. And just going back in history to kind of show you how these work, you can see right here, once it broke that level, it just continued shooting up, but it has come back down and tapped it multiple times. And then in the future here, tapped it multiple times. So this was the first support level that held it was in June of 2021, July of 2021. Then it came back in January of 2024 and also in February of, 2022, February of 2022. When it finally broke, it had a significant drop to the downside. And then, of course, that line continues to rise here. It did act as a resistance February 19th, 2024. It has been a support in July of 2024. Is it going to hold support again? Will we even get there? I mean, the 50 exponential rising average could be there and hold it as support as well. Now, as we've talked about with that XRP fair value gap here, I mean, the interesting thing is, right, we haven't had a blast off to the moon for XRP, so there hasn't been many fair value gaps to the downside that needed to become filled. But Bitcoin, it has a lot of potential downside here, as we can see. The most pressing downside right now would be getting into these fair value gaps at 43,000. This one here is the most realistic one to the downside, 50,000, because of the fact that potentially if the economy starts to crash, people are going to move out of risk on assets such as stocks and bonds and equities, move it over into gold, silver, and potentially Bitcoin. So if we had a dip here and then a rip to the upside, I could definitely see that as a potential. As we jump over here to gold on the weekly charts, we can see something very similar here, though. Gold does have some significant downside open availability in the market for these weekly fair value gaps. So what I'll be watching for on gold to see if it breaks below this 10 exponential moving average. Will it then come down into that 30 and ricochet off from there, like we're looking for right now on Bitcoin? Bitcoin holding strong on that 30 right now. Gold has a lot of room to the downside to even get to that 30. So will it crash? Looking at the Dixie, which is the dollar, which we talked about in that article, we can see it has started to really start to come to the downside. And we can see right here recently, it did fill this weekly fair value gap. And the next weekly fair value gap for the dollar is all the way back at 101, which would be significant. If the dollar continues to pour to the downside, that is very strong for gold, and it can be very bullish for Bitcoin and other cryptos. As we take a look here, we can see when prices come down in the past and it hits one of those weekly fair value gaps, it typically reacts pretty violently to the opposite direction. It created another one here. It hit it, reacted, but we are now getting, obviously, this is a lower high from here. This is a new lower high, starting to round off. It's going to be interesting to see what happens here, though, because as you can see, we've had new higher lows corresponding with new lower highs. So if on this weekly chart, we do come and get into this fair value gap, it would then create a new lower low as well, because this is our most recent higher low. If we break below it, it would then have a new lower low. Change of character in the market completely. Now let's take a look at the S&P 500. And looking at this chart, it looks like a nightmare, potentially. Not to say that it's going to, but as we can see, look at all of this liquidity that could be swept if we have a black swan event. Are we going into World War III? Like that's what's all over the news right now, right? They're trying to scare the crap out of us and freak us out. But not every single fair value gap has to be filled. So this one just got filled literally this week. So that one got filled to the downside. We have our next one down here, which is just below our 30 exponential moving average, getting the S&P 500 back to 5173. Take a look at the NASDAQ. NASDAQ similar, right? It just had a fair value gap filled. There are two fair value gaps to the downside right here below this 30 exponential moving average, getting into that channel. And a lot of times what you'll see in a bullish posture market, price will dip into the channel between the 50 and 30 exponential, and there's a lot of buyers waiting to really take advantage of that. So price getting right here or here in between this line and this line, so that's that 17,000, 18,000 mark, right? We could see a battle back to the upside, because as we can see right here, the market dropped so heavily 2 weeks ago. So this week, 1 week, 2 weeks ago, that it left a fair value gap to the upside. So could we even see the bounce off the 30, go back to the upside and fill? That's why it's exciting to watch the markets on a frequent basis. Now, as we take a look here, US 30. And another thing that I like to talk about is the 10 exponential moving average being above those two. That's still in bullish posture until that comes back down below it, which, as you can see, it did it right here, but it was a fake out and then it ripped to the upside. But we did leave several fair value gaps to the downside on US 30. I mean, there's even some severe ones down here at the $30,000 level. So taking a look at this chart, like the last time we had all these fair value gaps filled was all the way back here in October of 2022. There is still one down here, which, in my personal opinion, probably never going to happen, never going to be filled. 28,000 on the Dow Jones. We're currently sitting at 39,000. So to the downside, right? There's downside potential on US 30, downside SPX, downside on gold. But the only thing that prevents us from thinking that, oh yeah, all of those things are going to crash down there is we got the dollar coming down, right? So when the dollar's coming down, it's getting weak. With that, typically, you're going to have your risk off assets, Bitcoin, gold, that will correspond the opposite way. Now, what's interesting though, with the dollar to the upside, we do have this huge fair value gap, and then we have a couple more here, which gets us back into that 115, 117. And that comes from the previous highs of January of 2002. Jumping over here to the daily look on the Dixie, the dollar, we can see there was a fair value gap right here. It was left from back on this candle of March 14, 2024. And it just literally, look at that drop, right? It went swablam right into that area. Now, there is another one down here, like we just talked about on the weekly, it gets us there as well. Let's look at gold. Gold has a potential real one right here at 2340. I mean, these other ones are real ones, but getting down to these levels right now in the market conditions, if craziness starts to happen, if World War III happens, if Iran goes to war with Israel, any of these scenarios start to happen, gold is going to actually be a safe haven currency. So we'll continue to watch what happens in these markets. One last look over here at XRP on the daily again. We do have these fair value gaps. The lowest fair value gap right now that could be filled, 44 cents. I mean, unless some severe market stuff really does start to happen, we got 36 cents. XRP loses its case or something like that. We've got one down here as well at 27 cents. I mean, let's see, when was that one from? The 27-cent fair value gap left us January 27th-ish, 2021. So it is still lurking there. I mean, as you can see, if you look in the history, every one of them has been mitigated at some point. So could we see a 27-cent? I mean, there's even these down here, but the market has passed that. I mean, look at this. These would be from essentially when May of 2017. So that's like those people on the internet, crypto's going to zero, right? It's not going to zero, guys. Let's go ahead and jump over here to x.com, Twitter, and you can find me over on X if you would like to follow me at Real Win with Ryan, at Real Win with Ryan. So here we got XRP Crypto Wolf 2 hours ago. Holy SHIT, what the F did I wake up to? Obviously, because crypto crashed pretty hard. Today was a pretty massive drop on the daily, actually. We do have some good recovery happening right here on XRP to the upside. Let's take a look on a smaller time frame, what's been happening. So these last 4 hours, as we can see, last 4 hours running up, filling a 4-hour fair value gap, of course, that was left from this candle here on its way back up here to our magic blue line at 54, 55 cents. And then for those of you that are watching when we talked about the charts in the past, the 5 levels of XRP, for some reason, are extreme levels of support and resistance. So you got the 45, 55, 65, 75, 85 cent levels. Those are always very important when it comes to XRP. But as we look here on the 1 hour chart, what we can keep an eye on is if we do have our 10 exponential moving average get some momentum to the upside, cross over the yellow and red, the 30 and the 50 exponential moving average, turn into bullish posture, we could be running up and filling all of these fair value gaps to the upside that just got left on this crazy drop. And what's interesting, if we take a look here, as soon as the 10 exponential moving average crossed over right here, both of them to the downside, as you can see, that's when it really started to bleed out. DXMC says, for over 18 months, I have said the following: next crypto cycle will be different and less fun way. ETFs wouldn't redirect the market higher on their own. Recession is most likely outcome for this business cycle. Recession would be most probable to blossom in 2024. Rate cuts are not bullish catalyst. The next Fed easing won't be as powerful because the rate insensitivity across the economy. Housing is in an affordability death spiral because prices, not mortgage rates. Interest rates will set a higher low in the next downturn, and ZIRP is over barring a depression. And obviously, we definitely don't want a freaking depression coming. It is interesting to see these views become more accepted as the saga has matured and deepened, particularly about the crypto cycle being unimpressive versus 2021 and the possibility of rate cuts having a muted effect. Now, the interesting thing is when I'm doing my research, finding articles for you guys and for us and looking into Twitter, it is very important to be unbiased, right? Even though you could have your favorite tokens, which we all do, but the markets are the markets. They go up and they go down. That's another reason why, whenever I talk to people, they talk to me and they ask me, oh, what should I do with this and what should I do with that? I want to do trading and this, that, the other. Personally, and this is my personal opinion, I'm not a financial advisor. I always say it's good to have a long-term hodl bag and then a trading bag, because the markets, this right now, the drop is exciting, right? If you know how to trade and you're doing some shorting and things like that, it's crazy, it's great, it's exciting. But your long-term hodl bag, it's just there, right? It's just always there, and you're never worried about it. Whether it goes up or down in the markets, long-term prices go up. So this person, obviously, for the last 18 months, they've been saying that it's going to start to come to fruition to the downside. It has. Also, this one blew my mind right here. Just in, global money supply, M2 money supply hits an all-time high. Send it, Jerome. So if you guys have all seen the meme of Jerome Powell just doing his money printer, Jerome make money go brr, right? So right now, there was a resistance line, and the M2 money supply has now broken through. From Emily over on Twitter or X, when in doubt, remember that the cryptocurrency you have invested in has been tested and approved by some of the largest banks and financial institutions out there. And then imagine all the partnerships you don't even know about yet. And this is obviously talking about XRP. And this is a list of all the different partnerships and companies Ripple XRP is working with their ledger on. So like I said, the long-term hodl bag, not a big deal. I thought this one was funny right here, a good little video. So we got this dog drooling over the food that's being grilled, the dip, right? We're going through the dip, and then the dog, me, out of cash. So wanting to buy more, but obviously he's out of cash. The government's not, because they keep printing it. The money supply has just continued to go up. So in the meantime, if you are upset or bored because the market is doing what it's doing, you could always play a game to earn XRP. So discover how to earn more crypto in less than 10 minutes per day with the first XRP play to earn game. The link is down in the description. It's going to bring you right over here to this page. That page is going to have a video you can watch, or just click get started now. But I would recommend watching this video. You are going to need a Zaman wallet, which is the best XRP wallet out there. So there's a video explaining how to set that up. And then, of course, how to get your game pieces. It's really great. The game pieces do certain things to earn you crypto. The in-game currency is called crypto that you can then swap direct for XRP. So go ahead and check it out. Get started immediately. How to play the game. Crypto Lamb can also be purchased on the secondary market. It is a real currency out there. We even have a video, once you've been earning some crypto within the game, how to withdraw your crypto and turn it into real crypto XRP. And as we can see over here at Sologenic Dex, you can swap crypto, which is the in-game currency for XRP. One crypto right now would be equivalent to 177 XRP.